All right. Well, I like to start things on time, so let's get into it. We have a very small group today, so if any of you want to ask questions or anything like that, don't be shy. Just jump in. From time to time, I might be distracted by letting someone else in and so on. But anywho, let's get into this. As you can see in the headline there, folks, our Wellington values are down again, down a little bit. In actual fact, so the values in April are about as low as they've gotten again since the recent peak in late 2021. So after 2021, we fell very, very quickly until about mid 2022. Then we fell really quite slowly until kind of early 2023 or so, where it really it got to its lowest point, which was a bit over 25% down. Then we recovered in 2023 as we head towards the election. Then once the election was out of the way, and so in that period of time, we got better results because fewer vendors were bringing their properties to the market. So prices appreciated a bit. Duration to sell came back a bit. It became easier to sell, better prices a little bit. So vendors saw these good results taking place. So they thought, look, let's sell. I want to put the property on the market, but not until after the election. So the election happened and everyone just dumped their property on the market. And that, of course, made it very difficult to sell. So the trick is always trying to do what everyone else is not doing. Just let someone else in. And so then we saw it become a whole lot tougher again after the election. So values deteriorated again throughout late 2023, most of 2024. We had a little bit of a recovery at the end of 2024 and the very start of this year, 2025. And then in the last few months, it's eroded away again. So that's roughly what the pattern has looked like. And we're now back at approximately back to the same lows that we saw about 2 years ago in terms of nominal values. So message to sellers continues to be, it is pretty tough out there. We've got, relatively speaking, a ton of supply. Broadly speaking, more supply than we've seen for 10 years. So that makes it a whole lot tougher to compete for the attention of buyers. Does that mean you can't sell property? No, it just means that you have to be committed. Testing the market, seeing if there's a huge offer out there, that's a waste of time. If you want to sell, you resolve compliance issues if there are any. You present it well, you get everything tidy, and then you price it so that the pricing is realistic, right there in the market, in amongst your competitors, or even better, slightly below, to generate a whole lot of activity. And then, yes, you can sell and it doesn't take forever. Message for buyers, of course, is this is amazing, amazing conditions for buyers. There's a massive amount of choice out there. It's interesting. Obviously, as agents, we're talking to buyers all the time. And if you see a buyer come into the market, obviously, most buyers that are in the market today, a lot of them, if they're new to the market or this is first home buyers, which is a big chunk of the market, if you ask them, how's it going? Is there enough to choose from out there? Invariably, most of them say, no, there's not enough choice. And then I like to wake them up and tell them, well, actually, you've got more choice than you've had for 10 years. This is as good as it gets. So don't expect it ever to be better than this. Oftentimes they then say something like, oh, but not in Miramar or whatever. And of course, that's always a smaller segment, but relatively speaking, on average, there's more stock of all kinds everywhere across the whole city. So fantastic times for buyers, that's for sure. All right, let's get into some of the details. So median sale price, 775 in April versus 820 a year ago. That's down 5%. Things go up and down a little bit, bouncing around. As I say there in the red star, we've been broadly stable since middle of 2022, as I said earlier on. Big price drops until the middle of 2022. So since July 2022, we've been roughly going sideways, as seen in that red line there, which is the 6-month moving average, up a bit, down a bit, 5% here, 5% there, and so on. So that trend is useful to look at. If you actually look at if you're looking at the actual specific data points, the median sale price is not as useful in determining underlying value because it's influenced by the mix of properties sold in the month. So let's look at the Real Estate Institute House Price Index, which is the best guide, in my opinion, and many others, into what is the best guide into movements of the value of property. And so this here is the league tables, and we've been winning, if you like, or losing the league tables for all the wrong reasons. That being, we have fallen further than anywhere else in the market. Nowhere has fallen further since the peak than the Wellington region, and we are back down to a greater than 25% fall since the peak, which was October 2021. The peak for the rest of the country, I think, was November, but Wellington was slightly earlier. And so you can see there, Auckland not all that far behind, and that's, again, quite consistently been the case. But both Auckland and Wellington cities significantly fallen further than New Zealand overall. And so it's kind of like this downturn has been a tale of two cities, and those two cities are Wellington and Auckland. Both Wellington and Auckland have fallen a long way since the peak. And if you look into the data and you draw a graph of what is Wellington city prices or what are Auckland city prices compared to New Zealand average prices, and compared to where they normally sit in relation to New Zealand prices, Wellington and Auckland, again, are deeply undervalued at the moment. So Auckland City, Wellington City are cheap markets at the moment, not necessarily cheap in terms of how many dollars it is. You go out there in the marketplace, talk to buyers, are properties cheap at the moment? Most of them will say, no, they're not cheap. They're a lot of money. But in terms of the value you're getting compared to other locations in the country, they're deeply discounted relative to where they normally sit in relation to other locations. So great time to be buying in Auckland City and Wellington City for those reasons. Over the last year, same story. Wellington has fallen further, Wellington has fallen further than any other region in the country. As you can see there, over the last year, Auckland hasn't dropped at all, and there are a number of locations that have dropped a bit, but equally there are a number of locations that have gained ground in the last 12 months. We've gone backwards quite significantly at just over 4%. The closest competitor to that is Gisborne Hawke's Bay at negative 2.8%. So we are quite in the lead there over the last 12 months or so. Over the last 3 months, at a 1% drop, there are two regions, Taranaki and Gisborne Hawke's Bay, that have dropped further than us. All the rest haven't fared so badly. What about Wellington in particular? So there's the graph for Wellington. Blue line is the monthly results. Orange line is the 3-monthly cumulative results. So you can see there in the chart, on the table rather, that Wellington 4.2% down the last 12 months, 1% down the last 3 months, 0.8% down in the last 1 month. And the shape of the graph I find is most interesting, and the orange graph, the 3-month cumulative change, kind of shows the pattern better than anything else. So you can see there we were dropping deeply in prices throughout sort of early to mid 2022. Then it shallowed out. Then we got some gains in 2023 leading into the elections. Then throughout last year we softened. Late last year we recovered a bit, but since February this year we've dropped in March and April. So the last few months have been poor. We had some recovery in the few months before that, but still that recovery wasn't enough to bring the overall 12 months or the last 12 months into positive territory, still over the last 12 months in negative territory. So, yep, Wellington not doing so well recently. And there we are in terms of the last 12 months. All of the local territorial authorities around Wellington have suffered. Wellington City in the lead again at 5.5% down in the last 12 months. Not great news for owners and sellers in Wellington City. I mean, obviously, stating the obvious, 5.5%, Kind of doesn't sound like a huge amount. It's not a huge amount. But if you've got $1 million property, that's $55,000, isn't it? So it can't hurt. Over the last 3 months, again, 1.1% down. And this is what I find really interesting. Wellington City, you'll see the shape of the graph is broadly the same, more ups, more downs, and the ups are a bit higher and the downs tend to be a bit lower. But the shape follows the region overall, which is not surprising. But gee, if you go out and ask someone over the last 5 years, and you think about the last 5 years, where were we 5 years ago? 5 years ago, we were in lockdown, pretty much, right? May 2020. We were just coming out of lockdown, I think. And if you said, look, since lockdown and COVID, what has the Wellington City property values done on average since then over the last 5 years? I don't think people would say zero, which is basically what we've done. So, yep, certainly. And that's nominally, of course. So in the last 5 years, although prices nominally might be the same, in the meantime, inflation, wage growth in 5 years, gosh, that must be 20%, 20, 25%, 20, would it be over 20%? Might be something like that, 20, might be as high as 25% over the last 5 years. Certainly wage growth, I would have thought would be. So relatively speaking, property much, much cheaper than when we first came out of lockdown 5 years ago. And so obviously, if you could, then the market went up a bit, quite a bit. So the difference between the peak and now, 25% down nominally, but if you add in roughly 3.5 years worth of inflation, say 15%, 18%, you're talking about real house prices that are 40%, maybe a little bit more, 40% down in real terms since less than 4 years ago. So that is a deep, deep discount compared to where we were then. So houses really are on sale. All right, number of new listings coming to the market, 630 in April versus 779 a year ago and 461 2 years ago. Now, this is a good news bit of data for sellers, because as a seller, of course, what we want to see is fewer properties coming to market. The fewer properties are on the market, the fewer open homes there are for buyers to go to, the easier it is to compete for buyers' attention. And so this is the first time in a wee while where we've seen a decent reduction in the number of listings coming to the market relative to a year ago. So 19% down on a year ago, still 37% more than 2 years ago. But as you can see here, we, roughly 2 years ago, we were in really low levels of supply coming to market, way lower than we were even during COVID months. When the market was completely closed down. So we really were starved for listings back here. So anyway, good news that we're seeing number of listings reducing compared to 12 months ago. That's a good news story for sellers for sure. So significantly down on last year, but still much more than 2 years ago. Yep. And interestingly, we are bang on average number of listings coming to the market. So 630 versus the April average over the last 10 years of 636. So completely normal levels of listings coming to the market. Not a big oversupply like what we've seen a lot of in recent year or two. And there it is in another format. So you can see there, this is where we're receiving more or less new listings in the month compared to 12 months prior. So if you got a blue bar chart or a red line above the x-axis, that means more supply coming to market than the same time last year. If it's below the line, it's less. So typically over the last 18 months or so, we've seen more supply coming to market than the same time 12 months ago. In April, we've seen, only for the second time in about 18 months, significantly fewer listings coming to market. The other one was in December of 24, and December is a very light listing volume, unlike April. So the December numbers can bounce around much more. They're much more variable because it's a smaller data set. In April, you've got much more listings. It's a bigger data set, much more reliable. So that reduction that you see there for April is much more statistically significant than in December last year. So that's positive for sellers. What about the number of sales taking place? So you can see, look, the general trend since kind of COVID times, there you see the boom in sale volumes after COVID, still high sales volumes. Typically, we see between 600 and 800 on average in a month. in the Wellington region, and so you see it bouncing around in that range and here. And then after the COVID boom, we went from the top end of that range at about 800, consistently reducing after there until we get to kind of the end of the boom. The end of the boom is here, late 2000, no, here, sorry. And then we see number of sales drop off a cliff again and then bump along really, really low levels here. So, I mean, we're talking roughly 500 here, which is really very, very tight supply. Sorry, very slow activity indeed. Very few sales taking place compared to what's normal. So those of us who rely on sales, transactions for a living, that was very, very hard times there. Now, since early 2023, we have seen a gradual, slow, but reasonably consistent increasing in the number of sales taking place. This, again, is good news for sellers, because despite the big ups and the downs in the amount of listings coming to the market, the sales volume has consistently, but slowly, it's a slow grind, but it's reasonably consistently improving over time, and that continues here. So we see 632 in April versus 609 a year ago, 471 2 years ago. So only a little bit better than a year ago. And interestingly, again, bang on average number of sales taking place in April compared to what's normal over the last 10 years. So we had pretty much exactly what is typical in terms of supply coming to the market, and pretty much exactly what is typical in terms of number of sales taking place. So if you look at just those two data points, how many listings did we get on the market and how many sales took place in the month, you would say that is an absolutely typical amount of activity taking place in the market in terms of stock coming on and stock being sold. What's not typical is the gross number of listings that are available, the inventory, if you like, the total supply on the market, not the new listings, the total number of listings. So that's the thing that's different. As I say, if you want to ask any questions or clarify anything or talk about anything, just jump in. And so there it is again in a different format. So look, a little bit ahead of where we were a year ago. We have seen sales generally increasing compared to the same month 12 months prior. The degree to which they are more has been slowly eroding. Obviously, the higher the sales volume gets, the less capacity there is for it to increase from there. So I would expect that to probably continue. Right, how long does it take to sell? So look, it is still quite long. 42 days. Average for April is 36 days, so 6 days longer than normal. It's not completely way off the charts. It's a bit longer than normal. Again, look at the shape of that red line. That's pretty interesting. For the couple of years after the boom ended, it went really a whole lot longer and then stayed quite long for a period of time. It came down, as I said, before the election, and since the election, it's gotten a bit tougher again. So we've been bouncing around at these kind of 40 to 50 days to sell a property roughly for the last year or so. So it's a bit longer than normal. 42 days in April versus 40 a year ago, 52 2 years ago. The overall trend is, it's been taking a little bit longer than what is normal. Inventory, this is how many weeks worth of supply have we got in the market. 14 weeks in April versus 13 a year ago, 17 2 years ago. 14 versus 13, not much different. Interestingly, the long-term average, and I don't know what the long-term means, is that 20 years, 25 years? I think it's something like that, is about 15 weeks. So at 14 weeks, we've actually got less inventory than the long-term average. On that basis, it's ever so slightly favouring sellers. It certainly doesn't feel that way. It feels like it's really favouring buyers. And the reason for that maybe is, or one reason at least, is that in the last 10 years, the average inventory on the market has been about 10 weeks. And at 14 weeks, that's considerably longer, 40% obviously, longer than 10 weeks. So compared to what we can recall in recent living memory, it feels a lot tougher than it typically has been in the last 10 years. So yeah, TradeMe listings, as is often the case as we come out of daylight savings and head into winter, we see listings start to erode, and this is because the number of listings coming to the market slows right down, and then as the buyers in the market see fewer listings coming on each week, some of them get a little frustrated and they start to reconsider properties that they discounted or decided against, or they circle back round to them. And so some stock that's been sitting around for a bit longer can start to sell a bit more. Just a question of, the amount of fresh supply coming on. So as you can see there in the blue bar chart, last couple of months we've seen reductions in the amount of supply on the market. That's typical for this time of year. But we're still 8% more than a year ago and 27% more than 2 years ago. Again, you look at broadly where we are compared to over the last 10 years or so, it has been since this time 2015 when we've seen more supply on the market than what we have now. So buyers, the message is there's an ocean of choice out there. Please don't wait for things to get better. It is unlikely to, in my humble opinion. I mean, obviously, anything can happen, of course, but I think the probability of buying conditions getting significantly better, at least, is a low probability. It's possible, but I think it's a low probability. And there it is, another format. So we're still ahead of last year. As you can see, the blue bar chart is above the x-axis, but not by much, and to a decreasing degree. So that's the detail, folks. So in summary, values are down again, down versus 12 months ago. We had some recovery a few months back, but it's been eroded again. And this is especially so in Wellington City, and values are actually down to about the lowest levels we've seen once again since the peak of the market in late 2021. New listings are down versus a year ago, and they are about average for April. Sales volume is up a little bit versus a year ago, and they are also average for April. So on those two, based on those two metrics, April was an absolutely classic average month for new listings and sales. Duration to sell is up slightly, and it's a bit longer than average for this time of year. Inventory levels are just below long-term normal levels, but significantly above what we have typically seen over the last 10 years. TradeMe listings are up versus a year ago, but down in the last few months, as is typically the case seasonally. So as I keep saying, sellers, values are softer again in April. There's just been too much supply. It's difficult. You've got to fight hard to attract attention of the buyers. And buyers, there's lots and lots to choose from. So don't wait for things to get better. Get amongst it. So big thanks, of course, to Real Estate Institute and to realestate.co.nz. I have a few general economic sort of stuff which comes from Tony Alexander. There's something in the chat here. Have you seen many investors cashing up? Yes, I have, Peter. I have seen investors cashing up, and it's about time you started cashing up. So you need to call me. I need to sell your properties. No, just kidding. Yeah, we are definitely seeing investors looking to come to market, more so than we're seeing investors looking to buy. And this is reinforced by the feedback again from Tony Alexander's surveys. We are seeing investors slowly coming back to the market. I have to admit that in Wellington, I haven't seen a lot of that. A little bit, but not to the degree it looks like the people are seeing it around the rest of the country. And the investors I am seeing are the ones who are really, really experienced. So they've got really robust balance sheets. And so they are buying, your pure investment properties, multi-flats, lots of bedrooms, things that have no appeal to owner-occupiers, and they are demanding on their price and buying for cash flow. We're seeing things selling at 8%, 9% even, and we're not talking about necessarily really ropey property either. So extraordinary. But the number of sellers, yes, some investors are under pressure. We had, compliance difficulties in terms of healthy homes and changes to the RTA. Now, some of that has been unwound, of course, but historically we've had, compliance difficulties. We've had the loss of income, the loss of tax deductibility for mortgage interest. That again is being unwound, but there was a lot of pain there. We've seen massive increases in costs like rates, insurance, maintenance costs. And then now we've seen rents falling. So there are investors getting crushed out there for sure. So number of buyers, no, not many. But yes, a bunch of sellers. Jay, how long do you expect Wellington values to remain soft? Yeah, I don't have the answer to that. Sorry, Jay, I'd love to. I firmly believe that the next major move in values will be upwards. What I don't know is when that's going to be. But if we just think about what is going on in the environment, the landscape, that will either be a headwind or a tailwind for values. Really, the only major thing that is going to be a tailwind for values is we've got interest rates lower than they were 12, 24 months ago. Interest rates back down to about 5%. That's pretty good. Is there much chance they're going to go much lower? Most of the commentators are saying no, not by much. They could be wrong, of course, but and then in terms of the other factors, most of them are headwinds still. So we've still got unemployment rising, in particular in Wellington, with public sector labour market softness. We've got general economic malaise. GDP growth is suppressed. People are finding, small businesses are finding it tough. People are finding it tough. There's all the uncertainty around the job market that terrifies people. They pull their horns in. We've got a global uncertainty. And we've got immigration too, that has come right down off highs. We're still in positive territory, but small positive numbers, around 20,000 a year at the moment, last 12 months. But if you think about who's leaving and who's coming in, the people who are leaving are more Kiwis leaving, and some of them will be homeowners selling or putting their properties on the market to rent, and people coming in. Typically, a lot of them are lower skilled, lower income earning immigrants who, we need them, but most of them are not going to buy a home, or at least not for a wee while yet. So that's a tailwind. Sorry, that's a headwind for the market. So my view is that we're seeing more headwinds than tailwinds in the real estate market at the moment. So I don't see prices or values, rising particularly quickly in the near future. Once we have unemployment stopped going up, people who have lost their jobs, people who are going to lose their jobs have lost them. Everyone else now feels safe and secure, and those people then start getting on with making decisions and making moves in their lives. If we get student numbers coming back, they have started to improve this year versus last year for the first time since 2021. You get student numbers coming back, then the students will come out of the halls and into the private rental market again. If you get immigration coming back up again, you get GDP, economic growth happening again, so you get people coming back into town. You get small businesses starting up again, hiring some people, general prosperity. Then that stuff will be a tailwind and start moving the market along. How long is that going to take? I don't know. I don't think it's likely to happen in the next 12 months. But that's only my opinion, and I've been wrong lots before, Jay. So I know that doesn't answer your question, but hopefully it gives you a bit of context. Anything else for anybody else? Oh, look, someone's just come in and they want to be let into the room. Jay, so would now be a good time for renovations or development? Well, I think now is a good time for investment. Very, very tough to rent your property at the moment, unless you've got, your classic, really easy to rent stuff like 1 bedrooms, 2 bedrooms, very good locations, well presented. You got 6-bedroom places at the moment, very hard. Not in good condition, very hard. These sorts of things. So just a good time to invest, I think, at the moment. Good time to buy land if you're thinking of development. Land is cheap. What else? Yeah, but just a good time to buy. If you can buy decent stuff that's got reasonable tenants in place and so on, then yeah, I think the buying is pretty darn good at the moment. And it's interesting, isn't it? Because everyone at the moment sees nothing but risk and challenge and difficulty. 4 years ago, nobody saw any risk or any challenge or any difficulty. It was just like everything was just go, go, go. There is no risk. And that's the funny thing. When the entire market believes there's no risk, that is when it's most likely the highest risk. When the entire market believes that there is nothing but risk out there in the present and in the near future, prices reflect that. And so the only way to go from there is up, on a wholesale basis anyway. And so that when everyone is terrified, everyone is running for the hills, and when everyone thinks there's nothing but risk out there, now is a terrible time to invest. That is the best time and the lowest risk time to invest. Again, it's all about kind of counter cyclicality, but it takes a lot of courage and a lot of conviction to run against the crowd. It sounds easy when you read it in a book. Oh yeah, I know. I'll just invest counter-cyclically. Yeah, well, you try doing it in the real world. It is pretty scary. You've got to have a very high degree of conviction and be well capitalized. So hopefully that's helpful. Yep, you're welcome, Jay. Anything else for anybody else? Have got some general economic indicators here. If you want, we can go through that. This here is general confidence. So do you feel confident about the future? As you can see here, mostly negative. Do you feel confident enough to spend more in the next 3 to 6 months? We recovered quite nicely till the start of this year. Then we've gone backwards again. People's confidence is low. What about purchasing property? What about do you plan to spend more on a home? Deeply negative territory. Do you plan to spend more on investment property? Deeply negative territory and deteriorating over the last 6 months. It's been bad for a very long time, basically since the government made the announcements about the changes to the tax and all that stuff. And it just hasn't gotten better because we keep getting walloped. There's immigration. I'm sure you know these numbers. It's absolutely fallen off a cliff. So this is a headwind. Unemployment has been going up. I mean, look, it's not relative to history. We're still at very modest levels of unemployment, 5%. But it's the change that's most instructive. And that big increase is painful. But interesting, look there, it's just plateaued in the last quarter. So is it possible that we're approaching or roughly at the peak of unemployment? Maybe it is. And there's the jobs growth. So 2 quarters of deeply negative jobs growth. So that's job contraction. But in the first quarter of this year, we've seen some positive in terms of the number of jobs. So this is that's a glimmer of hope there. Do you feel that prices are generally going up or down at the moment? Was broadly neutral for 6 months or so, but in the last result, quite a bit negative again. More or fewer people showing up to open homes. It was quite positive. Now we've gone backwards again or deteriorated quite a bit again. And this is our own Low-Inco data. So this on the left here is number of people attending open homes. So January we were very strong. Came out of the gates earlier in the year really quite strong. This is typically the case because the number of people putting their houses on the market in January is quite low because most of them aren't organised enough. To get your house on the market in January, you need to have it ready before Christmas. Most people who decide, yeah, I'm going to sell my property now over New Year, summer holidays or whatever, and then they start getting ready and it's not on until February or March. And then you see the number of listings ramping right up and the number of people attending each open home, halving over the few months there. So that's a little tip. And we see it every time, pretty much. You want to sell your property in summertime, get it ready before Christmas. So all you have to do is your agent has to just come back and push the button and it's on the market. Well, it's an anniversary weekend and you get all these new buyers coming into the market and they want stock and there's very little there coming on. And so they feel frustrated. And so it's much easier to get their attention. And the same sort of trend happening over the last 6 to 8, 10 even months in terms of number of offers being made per campaign. And it's really back down to quite low levels at the moment. Late-ish last year, it was up to 2.5, 3. Now it's less than 2 again. That's it, folks. So unless there's anything else for anybody else, we'll wrap it up. But do sing out if you want to discuss anything or ask questions or whatever. Obviously, if you want individual advice, then just reach out to me. Happy to help, of course. All right, that sounds like that might be it. So yeah, thanks for checking in, folks. Have a good month. See you next time.